Let me welcome Dr. Niyi. Dr. Niyi, a very good to have you on the show, sir.
Thanks so much for having me.
All right, sir. So let's get down to the issue at hand. I know you must have reacted on other platform, but let's have your say. When you heard the news around 2 o'clock that NBS released the report, how did you feel?
Well, I think MBS released the report on time. It's usually that range
Exactly.
between 14th and 17th of every month. And we're expecting it. Of course, there was a lot of excitement because the threshold of decline was beat general projections. There were projections about decline, but not to the extent that was released. We're looking at a 21 under a 22, 21 by 4. Generally, that was the average of most analysts. Definitely not under 21. Then all of a sudden we have a near 20.
It was shocking.
It was shocking. So, but I think when, of course, you also after thoughts, you also do an aggregation of all possible pricing units, in the basket. One would say that in truth, there have not been much of cost input, on most items, on most consumable and service items in the basket. We have not seen much of price increase in energy. Over the last 4 weeks, we are seeing more of price of agricultural products crashing, and there have been testimonies, across markets to that about that. We have seen government policy restraining from levies, additional levies and taxes, on services and products. So, to a large extent, there are no observable increased cost addition, to business activities and, of course, to consumption. So I think there is a validation, especially when you look at the month-on-month headline, and, of course, even for food too. Food had been the major major mover of inflationary rate figures, and we saw a perceptible movement in between the June-July rates, when month-on-month it moved from 3.5 to 3.14, 3.12, and then a vast improvement in July-August movement from 3.12 to 1.65. So when you see the movement of food inflation month-on-month, it tells us that in a large manner, the rates that would impact rate, because it's actually a higher weighted item than most of other items in the basket.
Exactly. Now, talking about, although you have expressed it in your opening right now, how laudable this could be, but other Nigerians who are watching right now want to know the significance of this decline to the Nigerian economy.
Well, I think what is obvious now is that we can start talking about a trend. This is the 5th consecutive decline in inflation rate. When you have a 5-time decline in rates, you can start saying, okay, we are getting into a deceleration trend, and of course, can start talking assertively about disinflation. That is to say that the anchor is now that prices are on the decline. That's the expectation. Inflation anchor the belief is that the economic price-wise is on the positive side. Disinflation would say that the pace of price increase is now very, very slow. Unlike between last year March and December, when we virtually had a near galloping inflation scenario, moving from 28 to a high of 34.8 in December 2024. And of course, we had the rebasing after then, January, and we saw a vast reduction to 24.2 or thereabout. And since then, we've been seeing definite decline. But of course, when we are talking year on year, there is that issue of debate. Is it a true reflection?
Exactly.
Of the the pricing modem or the pricing threshold, as it were. But again, some of us will stand on the side that when we look at the year-on-year, we also look at the month-on-month, because the month-on-month is more of the actuals, as it were. This is the exact month we are experiencing. And so if we see any movement, especially in the month-on-month, we are able to use that to validate the year-on-year, or at the most to project what will happen in the coming month. So from last month, for instance, some of us have been comfortable with the fact that given the pricing templates that we are seeing, that it's likely we get into this swing, as it were, and it's a swing. You see the huge movement, you know, month on month from above 3 to 1.6. That's a swing. It's it's not a slow pace. I mean, it's not a high pace movement. It's a very, very slow pace movement.
Even the NBS even confessed that this movement has been seen it to be on that level that you have just mentioned. But going further, you know, since this figure was released yesterday, analysts like you, my humble self, have been looking at what will this play out on next week, 22nd and 23rd MPC meeting. I know you are also preparing for that. So many people are asking, wow, so what will the CBN do now that inflation is now declining to the level? And I could recall the last time you were here, we also talked about inflation, and you also made mention that at least going further, the MPC will definitely look at the body language or the figures coming out from NBS. And here we are, the figure is here.
Yeah, I think the figure is would even take the CBN by surprise. Because when the CBN made its projection, it projected 21, you know, as its own benchmark, you know, for the year, not even coming in August. So it came. The sub 21 came earlier than CBN's own projections and expectation, and I think for the CBN it's a milestone. It's a target figure. And at that target figure, the expectation is that CBN will want to, even if it's the purpose of sending a signal to the market, to say that there's confidence in the market, and of course to also say that a period of uneasing, you know, would commence. So I believe that the CBN would want to reduce the benchmark rate, even if it's by 50 basis points, and it's. There have been a lot of debate already over the last 24 hours over if it was even right for the CBN to review, you know, the benchmark rates, especially in the light of real returns, positive real returns and negative real returns. But I think if there's a reduction by 50%, or let's say even worst case 25%, and take the benchmark rate to 27%, it will not in any way impact the yield, you know, on the fixed income instruments, which are usually the more attraction. You know, for foreign portfolio investors. So the fear is that if the CBN reduces the rate, the problem is that foreign portfolio investors may be discouraged, especially when you also juxtapose that to the possibility of the Fed, you know, also reducing rates, you know, and when there's a reduction in rates in the United States of America, the tendency is for more portfolio investors to start looking for opportunities in the emerging markets like Nigeria. Nigeria already has this attraction with 27.5%, which is far higher, you know, than the inflation rate. And so the benchmark for the investor would be that if there's that reduction in the US, well, they have to put more money, you know, create more carry-on trade opportunities, and then come searching for markets like Nigeria. But I think it is also important that the CBN also sees the side of manufacturers in Nigeria who are also looking for cheaper credit. And of course, when there is a signal by the CBN, by reducing the benchmark rates, what it tells the market is that there is a trend. It establishes the trend in reduction of prices. So I think once the CBN is able to come up with that courage and do this, the rate of, reduction in inflationary rates would be intense. We can even do more than we have achieved, for the August rate, month-on-month rates.
Interesting. But on the other hand, we also saw before now, CBN released the PMI, that is the Purchasing Manager Index, and a lot of analysts were like, they are seeing something good coming from that angle, and it was very interesting that they also need to look at. But let's also take down this discussion to one of the things that many Nigerians will be looking at. The food inflation aspect has also, weighing down a little to 21 and thereabout. But what's your reaction to that?
The NBA itself put an explanatory note to the food inflation year on year, 21.7, and said it's actually because of, technically, because of the rebased, the baskets had a larger basket, and of course the figures were also rebased against a near-term reference year. So for me, since the MBS had also made that explanation, what we want to look at again is the month-on-month, which is it is what we spent between July and August that showed to us the real costs of our transactions when it comes to food. So, and that moved down from 3.12, to 1.65.
Exactly.
That is huge. It's also a swing.
Exactly.
So what that tells us is that by this figure, there was a fundamental swing, in the prices of food. So if that is the case, would it now validate the position of those other people that are saying, yes, we went into the market and food are cheaper? Now, the question would now be, if some people have said, oh, it's because of the harvest season. And I said, okay, well, my own position is, if harvest season has provided this mitigation around the food pricing template, now what that means is that perhaps government policy is also working. Because now we have seen more activities in the area of season, what do you call it, circular season farming. So it's not just about rainy season farming. You also have dry season farming, and that means the continuous 12 months period of farming. So if you have that kind of position, it does mean that in a way there is a change in the template of agricultural production, and we can now start being comfortable with the fact that if there is more intensity around food production in the 12 months period, as the different cycles in the 12-month period, we always have food to harvest, then we can find comfort in the fact that food will continue to be cheap, But for this, between July and August, what we have seen is that food is cheap. And when food is cheap, it impacts the life of the ordinary Nigerian, because it is established that most households, spend more than 50% of their income on food. And what that also translates to means that when you have cheaper food, it means that the quantum of fund an individual household spend on food also reduces. And when it reduces, there's also now discretionary spending. It does mean that the household, rather than just be feeding, can also buy clothing, can also buy what you call discretionary spending, away from the critical, normal, day-to-day existential spending. So so when you have this kind of scenario as we have with food inflation, I think it's good for the economy. But what is important is we continue to see this reduction, so much that by the end of the month, of the year, the rates, the inflation, food inflation, would have come down in such a way that festivity, because that is when food prices also skyrocket. So if by the festive period, December period, New Year period, food is cheap, then every Nigerian, can be sure that they will be part of that, of the feeding frenzy of that period. And that translates to mean actually that you have more Nigerians being circled out of poverty. Because the whole aggregate of what we are talking about is that most Nigerians that are under the poverty line don't even have access to food. And once that is if you have an environment where household can have access to 3 square meals. So we start talking about the fact that those households are living beyond the poverty level, which is stated at $2.30 at this time, moved from 1.9 to 2.3. So once they are living above that level, we can start pointing or beating our chest as a country that we're more poor people, are moving out of the poverty line or poverty circle in Nigeria.
But talking about the poverty, the NBS was able to point out that between rural inflation and urban inflation, there is a big dichotomy, in a sense that the rural area is still suffering from inflation. What do you have to say about, because the main mention about, although from the urban sector we have is 0.49 from 1.86, and for the rural area is still about 1.38 from 2.30, which means that rural areas inflation is still high. And the main mention of critical issues, high cost of transportation, insecurity, and access to some things that will make life comfortable for them.
Yeah, infrastructure. Well, the truth of the matter is that market, called food movement, especially from farm gates to city gates. When you talk of transportation of goods, there's limitation.
Exactly.
But even in that, the irony is that you produce more at the farm gate, but you eat less at the farm gate. Because 90% of what you produce at the farm gate, you move to the city gates, not even directly by the farmers now, but by the middlemen. So it's the middlemen that actually make the profits than the farmers. It's the middlemen that go searching at the farm gate, interact at the level of the farm gate. And don't forget that because of subsistence farming that we are mostly involved in Nigeria, the farmer try to make a living, from living and existence from the small he had produced. So it's the middleman that now go from each farm settlements to gather all this, make it a bunch, and then move them, of course, to the city gates. But in moving to the city gates, you have challenges of logistics. Prices of, fear of transport is challenging. Roads are causing, bad roads are causing wear and tear, and these bad roads are usually, perhaps sometimes non-existent roads, because we are talking of trunk C road, and that had been our concern. Most of us in the urban centers see roads 4, 6, 10 lanes, and we are so comfortable with this, especially those of us in Abuja. You see large, massive, in the metropolitan express road. But there are so many rural villages that do not even have access road from one community to the other. That even to move on a bicycle, or rather on a motorcycle, it's a challenge. And these are the producers, these are food producers. And so it is not just about movement of people, to move the food that they have gone to the farm, to produce, to move them even from the farm to the entrance of their own farm, has become a challenge. And between the farm gates, you've lost so much, what you call the post-harvest losses. So that's between the farm and even the trunk C road in the community. From the community to the main road that goes to usually the major park in the local government, and then from the major park in the local government, perhaps to the capital, where you are likely to have more sales, for the products. But the irony or the paradox is that the farmer, who is the author, the originator of this, is no longer involved, in the value chain, and therefore the average farmer is more or less alienated, from his products or from our products, as it were. And so there is a need for targeting, especially social intervention programs, to help enhance the livelihood and the standard of existence of the people in the rural area. And that's beyond even food, especially if you are looking at health, access to health, access to schools, because if you are talking of multidimensional poverty, these are what we are talking about, how does people, how do people get, what's the distance? What's the average distance between homestead to hospitals? What's the average distance between homesteads to schools? What kind of conveniences are provided, either in homesteads or within the community for conveniences, for you to either go to the toilet or to take your bath and all that. So those are the things with the concern, for multidimensional poverty. So if we go beyond the monetary aspect of poverty, we are also looking at the infrastructural thing. And that had actually been the basic headache for Nigeria because of the rural-urban drift, because the rural people are not met in their comfort zone. So they seek out. They tap japa,
That means domestic japa
domestic
or local
japa at their
japa.
own level, because they keep hearing of the good things that are happening, in the township, big roads, good schools, good hospitals, and all that. And that's what they keep hearing, and it becomes a dream aspiration for them. And then they keep moving into the township, and as they keep moving into the township, you have population overflow, and you now start having, urban poverty too, that also has its own social.
Sorry for cutting, but let's tie this to one of the things that the NBS said: inflation at each state level. They mentioned Zamfara with 36% inflation for food. They mentioned Kano 30%. They mentioned Akwa Ibom State 29%. The reason I'm mentioning this state is this: what do you think the state government must do to cut some of the challenges of food inflation at their domain?
I think for Zamfara, there's the natural headache or challenge would be security.
Exactly.
Even if we have not been there, virtually every day we keep hearing of security challenges and all that. And of course, we also know, I try to look at the two sides of the coin. So if indeed you've had security challenges, I also know that the Nigerian Armed Forces have been doing a lot to engage. But I also think that there should be a lot of communication, what we call development communication activities, in those areas, so that the first level of defense should be amongst the people. I am not too sure that we are having that. We should have what I see recently has been leadership at the community level trying to engage bandits, leaders of bandits who come, into a certain venue fully equipped as if they were going to a war situation. That itself is not even appropriate, socially speaking. So I think there should be a change of approach in such a way that the state should still be seen as the superior partner in any form of dialogue or negotiation with bandits. So for Zamfara, the obvious challenge is security. I think for Kano, it will be more of a movement of food produced in Kano into the urban areas. Kano is also part of the food baskets especially in the area of rice production in Nigeria. But I think you see more of traffic of food produced in Kano on the highway, going towards Lagos to Abuja to Kano City and such. And of course, what you have at the end of the day is a higher price for food. For Akwa Ibom is a littoral state, so it's more of a riverine state. I would have expected that it does more. It emphasizes more of its area of how do I put it now? Area of capacity. It's fishing. Fishing is also an agricultural form.
Exactly.
And if it's properly calibrated, properly planned, it will not just be a means of providing protein for the people of Akwa Ibom, but also providing earnings, income, for the states, and in a way that the states and the people of the state can also be able to attract food, into into the state, because if you have if you have a template of trade, you have resources you can sell and use as exchange, for other forms of items from outside your state. Who says you cannot live a comfortable life? If average fish farmers are enhanced, have capacity to produce more, and they sell more, they have more in their pockets to force exchange for yam and other forms of food items.
Exactly, interesting. I think we'll be joining Prince or Ilesanmi Emmanuel, who happen to be a stock analyst. Who also, for the last 24 hours, we have seen stock also reacting to the Nigerian inflation. So Prince Ilesanmi Emmanuel will be joining us all the way from Ondo State, so that we can also see the aspect of stock reaction to inflation decline in Nigeria. Prince, if you are there, very good day to you. We're still waiting for Prince to join. But Doc, on your own part, I know you're also an investment analyst. What was your view of the stock reacting to inflation after the release of the figure yesterday?
Well, anytime there's an increase in, there's a decline in inflation,
exactly.
The market is excited. So it's for investors, especially domestic investors, it's an opportunity to do more. Because you are no longer hedging here. The fear is not about hedging. It's not about losing value. It's about now properly taking position. Because now, of course, if you also, this is the time you have extra, to go into a market, and that market is actually on the upswing. We experienced some sort of decline as a result of profit taking over a period of 3 weeks, But I think it's back in an upswing mood. I saw the reports from yesterday. The market immediately responded positively, to the inflation news, and of course there has been a trend now over the past 2 weeks too. The market had been responding positively to stocks, insurance stocks, and of course to banking stocks as a result of the recapitalization. The recapitalization exercise going forward.
Going on.
Yeah, and generally, I think I should properly also congratulate the Nigerian Stock Exchange Management for the addition of 8 more billion dollars evaluated companies. By 2024 December, we had 10 billion, 1 billion and above stock. Valuation companies. That is companies that are worth more than $1 billion. Just 10 of them. They're between January and now. We've had 8 more. So it shows the growth, in the stock market, and of course that is truly an upswing for us. Most likely there will be more companies declaring dividends.
All right. Okay. Let's quickly join Mr. Prince Ilesanmi right now. A very good day to have you on the show, Mr. Prince Ilesanmi. All right, can you unmute your mic? We can't hear you from. Okay, sir, unmute your mic. We can't hear you over here. Okay, we're still expecting a better connection with you. But from what you have said so far, I could also recall that there are 4 big companies that meet up that particular range of value that you mentioned.
Yeah.
Although we are not running advert for them, but it's good that when we talked about stock market, we talk about some of these. Okay, I think Prince is here, but one of those companies. Hello, Prince. A very good day to have you on the show, sir.
Good afternoon. Thanks for having me.
All right, so let's get down to our discussion. What is your reaction to inflation report of yesterday, and how has market been doing from your side?
Number one, the announcement is received with a lot of excitement. lot of excitement in the sense that, number one, you recall a few days ago, Mr. President asked for a reduction in food items. Number two, security is even better compared to recent past now. And apart from this, you will realize that the gradual reduction in that inflation rate is an impetus. Just within I think within the last 72 hours ago, there was an announcement of 4% reduction on imports declared by the Nigerian Custom Service. So all this is an added impetus, and we all know that this is a harvesting period where many things are coming out. And above all, now Dangote refinery is doing something by bringing petroleum product to almost the doorsteps of everybody at a particular time before now, when there will be queue everywhere. So we believe that in doing this, transportation to bring all those food items to the market will have a lasting impact. And when all this are happening, people and masses are bound to receive some, relief from the burdens of inflation.
Interesting. Now, talking about the market, let's take a look at the Nigerian stock market. How has the market, the stock, reacted to this inflation also? Judging by next week, there is going to be MPC meeting of the Central Bank of Nigeria. But from your own, as an insider in the market, let us have your reaction to all this happening right now.
Thank you very much. Across the globe, in Asia, in UK, in US, for example, US tomorrow, they are going to have their MPC. And then, globally, people move to area where these rates are, helpful to them. And apart from this, next week we expect it may not be necessarily a thing that the CBN will reduce drastically, or the Monetary Policy Committee, as the case may be, but they will be following the trend in other climes of the world and other, areas of the world. And, like for example now, if the rate is a bit commensurate, you see people moving down to such area for business. And then this one is another impetus for the rise of the stock market. And for Nigeria, we are waiting patiently for next week, when Nigeria MPC will hold their meeting. And apart from this, or added to this, we are eagerly waiting for the central bank, clearance for bearance on banks. And immediately those are cleared, you will see massive trunk into the stock market, because people are eagerly waiting, like the other colleague has said. People are eagerly waiting for the market. And so the moment these forbearance issues are cleared, you will now see massive injection of funds into the capital market, because we want to take interim dividend for the third quarter. Half year.
Exactly. Now, talking about the third quarter, just some few days from now, the third quarter will be ending. But particularly yesterday, we saw the market coming up, and today we're also seeing the market coming up. But what will be your projection for the rest of the week? Talking about Nigerian stock market going forward.
For the week, it will not be straight gain or gain, gain or loss. It is going to be more or less a mixed grill, because this week, children of a number of people are resuming into the school. And that one will temporarily or momentarily affect, pulse or pulses of some parents. But beside that, after that, and with the expectation by next week, it is even better for people now to be, to stake their funds, because as soon as all these things are solved next week, or as we hear the declaration by next week, you will see a lot of queue on the stock market for people, to invest and to put in their money.
Very interesting. Prince, I have to let you go now, but hopefully it's a developing issue. We'll still have to bring you back at the course of doing this program and also doing our work on Nigerian stock market. So thank you so much for coming on the show today.
Thank you.
All right. So enjoy the rest of your day over there in Ondo.
Bless you.
All right. So back to you, Doc. You are aware what Prince have said.
Incidentally, we are Ondo people.
That's very great. Ondo people on my show today. So we have Ondo people on market report.
We have dominated your market.
Definitely. And I love that, so that we can bring more money. Yeah. Now talking about the stock market, as Prince actually said, he said everybody's waiting for MPC meeting come next week. But the global trend is also having issue. Today, tomorrow, US Federal FEC will also be making, an announcement. But what do you think about that announcement in relation to Nigerian MPC meeting coming? Because you can't isolate global market from what is happening right here in Nigeria.
Yeah, you cannot, because and that was why I made reference to the fact that whatever is decided at the Fed, at the Fed meeting, will also impact the movement and direction of foreign portfolio investors. And when we are saying foreign portfolio investors, the global investment community still look on, despite BRICS and all that, still look on to what happened in the American states, or in the United States of America, to determine the pace and the intensity of their investments.
Exactly.
Whereas the thinking is that inflation is on the increase now, 2.9 in the United States, and whereas in emerging markets, when inflation is on the increase, we resort to tightening, monetary policy tightening, and that is increasing the percentage interest on the benchmark rate, which will now also reflect on loan credit interest. But what had determined the United States' intention to reduce its benchmark rate is reports of reducing job creation. So you are now having more unemployment. And to that extent, there is a need to create a cheaper credit rates, in a way that businesses will take more credit and invest to expand and then create jobs. So that is what is driving them. We have also had this same scenario now. We've had issues of business complaining that the rates had increased because of the benchmark rate at 27.5, tightening, monetary tightening. At the end of that value chain is the money deposit banks that are also now lending at close to 35%. And of course, how many businesses can make a profit from a credit of 35%, interest rate? So one, you would need to have close to 50% returns, profits, on that investment for you to even start thinking of ploughing back into the business to expand the business and then create jobs. So the advocacy, which I had always resisted, because you must trade off. You must take part. One of the elements of trading off. Do you want a situation where inflation rates continue to erode, purchasing power, or you control inflation rates to a point where it preserves purchasing power? I had always aligned myself with the situation where, or with the scenario where purchasing power is protected, for some time. And then, of course, you can now, when inflation rate had been managed properly, you can now, of course, have money to give out, or rather to do more for businesses. So, as it were now, we have seen a drastic, because if within January and August, we have seen a 4%, more than 4% reduction. That's from 24 in January to 20 in August. That's more than 4%, shave off, in the inflation rate. So I think it essentially gives a reason, for a reduction in the MPR, no matter what. Even if it's just 25% or the 27%.
They can take out.
Yes, it's just to send a signal to the market that the CBA and the Monetary Policy Committee is also aligned to this new trend of price falling, And that will, of course, also send signals to producers and manufacturers, that now they can access cheaper credit. And because they can access cheaper credit, they can now, of course, now start reinvesting, into their businesses to create more jobs, and of course to produce at a cheaper rate. And because this thing is secular and cyclical, if you produce at a cheaper rate, people are able to buy at a cheaper rate and therefore conserve more fund and be able to move from existential consumption to discretionary consumption. And of course it creates a new ecosystem within the economic space in a way that people's well-being is guaranteed. And that is the underlying position of any economy.
Very
people's well-being.
Exactly. I will take that from Doc. People's well-being is the underlying factor or the score of any government economic policy across the world. And for Doctor, this is the way to go. And for us here, we have come to the end of today's edition of the Market Report Show. And thanks to Dr. Niyi for coming around to share his wealth of knowledge, particularly on Nigerian inflation